Global markets log into a rally as the European Central Bank announces an asset-backed securities purchase program to spur economic growth in the region. It's a stimulus plan and could result in a gush of liquidity to emerging markets like India as well.
On the Lal Street, markets take a breather after 3 days of record closing. The Nifty closes a shade below 8100 after a late recovery. Defensive sectors stay firm even as investors take some profits home.
Shamed with a willful defaulter tag, Vijay Mallya refuses to give up the fight against his angry lenders, says he's been unfairly targeted by the United Bank of India, and also denies the rift between the UB Group and Diageo over management issues at United Spirits.
Maruti moves to shield itself against currency volatility. The company's chairman R.C. Bhargav tells shareholders that royalty payments to the Japanese parent will be made in rupees for all new models.
Controversial CBI Director Ranjit Sinha offers to recuse himself from the coal scam probe, even as the Supreme Court rejects his plea for a gag order on media. Meanwhile, petitioner Prashant Bhushan accuses Sinha of shielding some culprits in the 2G and Colgate scams.
Hi there, very good evening. You've joined us right here on Market Hour. I'm Tanya Bharadwaj.
Hi there, I am Ajay Sharma.
Let's get straight to it then. The big story that we're tracking this evening in what has taken international markets by surprise. The European Central Bank is looking to adopt what many call a Fed-style quantitative easing program. Today you had ECB President Mario Draghi say that the central bank would start purchases of investments called asset-backed securities in the month of October. While he didn't quite say what the size of this stimulus program would be, the move, many believe, will basically make credit cheaper at a time when concerns are growing that the Eurozone economy might go into reverse. Not just that, Draghi's also cut interest rates to a record low to basically boost consumer spending.
And as an impact of that, markets sharply reacted in Europe after this unexpected move. Wall Street also has been on fire. Dow and S&P both are closing in to a fresh all-time high. This added stimulus from Europe will result in a gush of liquidity in emerging markets like India, Italy, Portugal and Greece, which also reacted in trade. Well, after 3 record-breaking laps, the market today finally stopped for a pit stop. But this was the correction most anticipated, along with the expectation that equities will soon get back on the racetrack. The Sensex snapped its 9-day winning streak as investors finally decided to book some profits. But take a look at the intraday market. You would see that the first half of the market was actually weak, but in the last 30-45 minutes of trade, we tried to recover from the day's low, and that's the last hour surge we are talking about. Well, it was a return of quality as far as markets are concerned, and if you pull up the names which really helped the market recover sharply in the last hour of trade, you would see stocks like ICICI Bank, Bharti, and some of the big lenders. All of them, M&M also ended flat and recovered about 1% from late trade. ONGC was almost in the green. So quality stood out in trade in the last 45 minutes of trade. What collapsed was the high beta counters. Stocks like JP Associate, Reliance Communication, Indiabulls Real Estate, Unitech, DLF, anything to do with high beta levered companies, and they collapsed big time in trade. The good thing, of course, is that fund flows continued into the market. About 1,600 crore worth of equities were bought by FIs in today's session, and the DIs sold around 450 crores. But the story on the F&O side of the market is completely different. In the first 2 hours of the trade, traders really got scared and reduced their long positions in the Nifty futures, which shed about 9 lakh shares in open interest today. Same reduction of open interest position in banking as well. Options data also, some selling of call options in 8,300 to 8,400. In fact, people started positioning themselves lower. 76 and 7,700 put options added a lot of open interest. So clearly, some amount of caution and fear among traders, but buying on dips by institutions continues in the market.
Okay. Okay, let's welcome on board then our guest this evening. Joining in on the show is S. Krishnakumar, who's the head of equity at Sundaram Mutual. Mr. Krishnakumar, many thanks for taking time out for us. Let's begin by talking about the liquidity situation. We know that, flows into India have looked pretty healthy. How do you see that story shape up, given we've seen this sort of a stimulus plan from Europe?
I think the FIIs have been putting money into the India trade through ETFs and passive ways of coming into the country. Over the last 1 month, I think they have increased their bets. I think their confidence level on the new government to take the reforms forward is pretty high, as seen by the FIIs getting a lot more stock specific in their approach to investing into the country. We do hear them looking at companies which are down the cap curve too. All this points to their positive outlook from a 2 to 3 year perspective. So that's the way we would look at things from an FII perspective. The liquidity continues to be fairly good. The European Union could see a little bit of quantitative easing program in the next couple of months. That could add to the liquidity in the overall global markets, which would find its way into favorably positioned equity markets like India.
Krishna, markets seem to have entered an uncharted territory right now, from 7,000 to 8,100 in the matter of a couple of months alone. Where do you think are we headed from here on?
I would like to look at the market from a little longer term perspective, where we continue to remain quite positive. The near term momentum has been through a lot of factors like the positive environment created by the Modi's visit to Japan, the Jackson Hole meet in the US, wherein there was clear indications that the Fed would wait longer to hike rates in the US, and some moment of easing of tensions between Russia and Ukraine. So these are some of the factors which has created a renewed interest in India. Not to forget the softening crude prices that are significantly important for our currency and fiscal deficit.
You've alluded to the fact that the rally that we are seeing right now is thanks to strong macros as well as a whole bunch of global factors. What could be the trigger, you think, for some sort of a correction?
The risk could come from escalating geopolitical tensions in Iraq. I think still we've not seen the last of it. So in the entire Middle East could get drawn into the tensions in Iraq at this point in time. So that's something that could be a spoiler. The second is definitely more local. That's more in terms of valuations. One would definitely have to look at valuations vis-a-vis the kind of growth that one is expecting over the next couple of years, and the markets are getting to be showing up some pockets of overvaluation and euphoria. So that could result in kind of a time correction in the markets. I wouldn't say that there will be any significant downward correction, but we could see a time period where markets tend to kind of move in a band with thereby consolidating around these levels.
Right, Krishna, are you worried about stretched valuations in the large cap space, or do you think they could continue to look attractive even from current levels?
On the contrary, I would be a lot more worried about the mid caps and small caps at this point in time, given that the valuation gap between mid caps and small caps has considerably narrowed over the last 1 month. The mid and small caps have been in the limelight, whereas the large caps generally have been more, sedate in terms of movement. In many areas, we do find mid caps trading at, around large cap valuations, which build the case for interest coming back to large caps in the near term.
What's the view on, policy sensitives like infrastructure and real estate on the back of any sort of reform announcement that we've heard in the last 100 days?
Definitely, both RBI and the central government have been at work to help the beaten down sectors of the Indian economy, like the real estate and the infra sector. However, these measures would take some time to percolate and show up in terms of better performance at the ground level. While we remain positive on the long run, in the near term, we would await for some more signals for these companies to show better performance or better prospects.
Krishna, what's your view on defensive? Because those stocks seem to be making some kind of a comeback. Do you see more potential in the consumer space?
I think defensives definitely have seen some interest, and given that they have gone through a fair amount of correction, both in terms of price and time, we are seeing some amount of rebalancing that is happening. The growth, in consumers, etc., could kind of come back over the next 6 months, and that's what investors are trying to rebuild into their models and look at positions afresh.
All right, Mr. Krishnakumar, we leave with that. Many thanks for taking time out for us and really discussing your investment ideas. Let's keep the market opinion going. Many experts believe that the liquidity-driven rally is likely to continue for Indian equities. However, in the long run, they do maintain a cautious stance. Hear them out.
In the medium term, I think given the right policy initiatives from the government, I think we are in a bull market, and I think we should really be generating very good returns from the market. But as of now, I think 8200, 8250 seems to be at the level at which there will be quite some profit booking, and market might come back to below 8,000. I think the money is to be made in the cyclicals. It is not so much the FMCG. FMCG has had its best days. Yeah. I think those best days are behind us. I think they're very well, very expensive, more than fairly valued, and I think we should leave them alone.
Fortunately for cement, that there's not much of capacity creation in last almost 2 to 3 years' time. I think still small pharma companies will do well. They still have a lot of lag in which they can go to the next level and catch up on that. But somewhere this is a very racist view which is taken on this, that any company coming from third world countries, FDI has a problem.
The liquidity story, which is clearly driving the markets, rather than perhaps the day-to-day fundamentals, is set to continue. It may be that we continue to see India outperform China.
Well, time for a break here on Market Hour, but on the other side of the break, shamed with the willful defaulter tag, Vijay Mallya refuses to give up the fight against his angry lenders. Details when we are back.
Presented by Hettich Fittings.
For the first time in their manifesto, Prime Minister Modi talked about tourism as one of the 5 pillars of development. That's never happened before. So for us, that's great sentiment. And sentiment in our business often drives business to us.
Catch Dilip Puri on Tea Time. Only on ET Now.
Hetic Fittings. Make furniture work beautifully.